Right. Before we go any further, let's just revisit one of the sections from the beginner's guide, and this is where we talked about what is a candlestick. So we're just gonna summarize through on what is a candlestick, what makes up the market, and candlestick classification. So what is a candlestick? A candlestick depicts the fight between bulls, which are the buyers, and bears, which are the sellers, over a given period of time. Before we get down to the nitty-gritties, it's important for you to understand what a candlestick actually is. No, we are not talking about that kind you pick up from the fancy candle store to set the mood on your date night. We are talking about Japanese candlesticks, the market signal that shows the battle between bulls and bears over a certain amount of time. Why do you need to know candlesticks like the back of your hand? Because knowledge could give you the upper hand when the bulls and the bears are in the middle of a market fight. Candlestick formations allow you to find setups and determine market direction and identify optimum entry and exit points that could help you execute profitable returns consistently in your trades. As you can see, I've got two illustrations of a bullish candle represented with a green body and a bearish candle represented with a black colored body. So for the sake of this course, you're gonna find out that my bullish candles are going to be green and my bearish candles are going to be black. So this is my own personal preference, because color coding of the candlestick is dependent on you as a person. Some people, they like to use red on their bearish candle. Some people, they like to use a white on their bullish candle. So you can see on the bullish candle, we've got the body, which is like this large part of the candle. It's referred to as the body. As a bullish candle, it opens lower and closes high. And for a bearish candle, it is the opposite. It opens with a higher price and closes with a lower price. So you also need to take note of the low. Both candlesticks have got a low and a high, and in most cases there's like an upper wick and a lower wick. So these are the structures of the candlestick that you need to be well aware of. Understanding what makes up the market. Bulls, the bears, the buyers and the sellers. Is anyone else confused? Don't get your trend lines in a bunch. It's easier than you think. This is not rocket science, guys, like I've always been saying. And most people that know me, I always tell them it's not rocket science, but it doesn't mean that it's what? It's easy. Now that you know what a candlestick is, we can talk about how they essentially determine how you approach the market. At first glance, you will notice two types of candlesticks. Take note, during this course I'll be using the green and the black as default color coding for my candlestick chart. Most charts allow you to color code candlesticks however you like. For the purpose of this course, we'll be referring to the bullish as the green colored candlestick and bearish as the black colored candlestick. It's all down to personal preference at the end of the day. The green candlesticks, these are comprised of the closing price being greater than the opening price, thereby showing us buying pressure. You see, that's the green candlestick. Basically, that translates to a bullish candlestick. Black candles, their closing price is less than that of the opening price, indicating selling pressure, thereby predicting us this is a bearish candlestick. As you can see, we've got the opening price being high, and then we've got the closing price coming down when price has already moved to the downside. So you only need to know that for a bullish candle to be formed, the opening price is greater than the closing price is greater than the opening price, meaning it's higher, thereby showing us buying pressure. And for the bearish candle, the closing price is less than the opening price, indicating selling pressure. This is as clear as black and white. Now that you have done this and you have got this done and dusted, you are now ready to learn about bulls and bears. Candlestick classifications. We've got the bullish candle. Most people, they just call it a bull candle. Bullish candlestick indicate market momentum is moving in an upward trend. An easy way to remember this is by picturing an actual bull. You know, the bull, like the cattle, the cow. Bull's horns go up just like the market will when you spot this type of candlestick. So what exactly are you looking for? Keep an eye out for those green colored candlesticks we were talking about earlier. Once you have your bullish candle, take a look at the body. The bigger the body, the stronger the upward momentum for that specific point in time. Ideally, you want to identify a full-bodied candlestick with small wicks or none at all. This will definitely be showing you a strong bullish momentum. Then we've got the bearish candle. Short name is bear candle. Bearish candlestick indicate the market is moving in a downtrend. Do you need an easy way to remember this? Think of a bear trying to swat down a beehive for some honey. Only you are a trader and you are trying to sweat some pips into your profit and loss statement to help you see returns sweeter than honey. Now, what makes a candlestick bearish? Well, for some of you have already guessed it. The black colored candlestick. Once you spot one, make sure it follows the same body to wick ratio that we talked about for bullish candlestick, meaning it needs to have a bigger body and small wick or none at all. The body rule still holds true for bearish candlestick, except this time we are in a downward momentum. Guess what they say is true? The bigger they are, the harder they sell, or the harder they fall. So if you notice a big bearish bodied candle, you should eventually know that the momentum to the downside is very strong. The small wicks signify the highest and the lowest price points during that time frame of the candle. The smaller the wick, the less volatile the price movement during that time period. Small bodies with large wicks mean indecision and fighting for control. Large bodies with small wicks means one group is in control of the market for that particular time period. In the next section, we will start to look at the different types of bullish and bearish candlestick types that we use in our technical analysis of the market. I'll see you in the next course. Thank you.